What if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock.
Hey guys, welcome to Everyday Finance. According to Saylor, executive chairman of MicroStrategy, owning Bitcoin is about securing generational wealth that can outlast you rather than just chasing short-term gains. Bitcoin has formally established itself as the world's best-performing uncorrelated asset. Bitcoin stands alone as a stronghold of value in a world where almost all conventional assets are susceptible to depreciation due to factors like inflation, war, taxes, legal risk, and political meddling. According to Saylor, the majority of people continue to keep their wealth in assets that are vulnerable to systemic risks, such as the possibility of real estate seizures or high taxes, the devaluation of bonds due to inflation, and the collapse of stocks due to governmental oversight or cultural changes. Bitcoin, however, goes beyond all of that. It is stateless, borderless, and impervious to the common malfunctions of legacy systems because it operates in the digital sphere. Not only is it divisible and portable, but it is also uncorruptible, impervious to censorship, and available around the clock, irrespective of location, government, or regulation. Its strength lies in its ability to act as a hedge against the collapse of everything else, in addition to being a store of value. It is a new type of currency created for the internet era that is intended to withstand the same forces that devalue conventional wealth. It is not gold, real estate, or stocks. Additionally, Bitcoin's function as a digital vault becomes even more crucial as the world grows more unstable. Saylor delves deeply into the reasons why Bitcoin is emerging as the most robust, secure, and long-lasting form of wealth the world has ever seen. It is a type of monetary energy that can be passed down through generations without worrying about being seized or depreciating. According to Saylor, Bitcoin is a lifeboat rather than just an investment, so if you're still considering it as a trade, reconsider. See why a few lines of code and a private key may be all that is needed for wealth preservation in the future, rather than banks, deeds, or vaults, by reading through to the end.
The greatest digital transformation of the 21st century is the transformation of capital. You're supposed to be in the digital transformation business. This is the transformation of capital, right? Global wealth is spread across $900 trillion of assets. Bitcoin is $2 trillion. Most capital is divided between long-term capital, that's the store of value assets you just hold to keep your money, and then other assets held for utility, the stuff, the building you need to work in, the warehouse, the working farm, the stock you're holding for dividends. When you see the world that way, what you realize is that risk factors are destroying the long-term capital, right? Your capital is being destroyed by taxes, by inflation, by tariffs, by insurance, by torts, culture shocks, regulation, antitrust. Every single 10K has got 30 pages of these disclosures in them. And so that long-term capital, it's transforming into digital capital because there's no fires in cyberspace. There's no hurricanes in cyberspace. There's no tariffs in cyberspace. There's no war in cyberspace. Why don't you just move your money someplace where some politicians is not going to take it away from you, or some war isn't going to deprive you of it, or lightning's not going to strike it? Because at the end of the day, Bitcoin succeeds based on a simple premise. A bunch of smart people in the world would like to keep their money. Period. That's the idea, right? Who's buying it? The smart money. The smart money everywhere in the world is buying a digital network to keep their money. That's the idea. Digital capital is, it's better. A digital building is better than a physical building. Everything you hate about the building, that it's visible and the mayor can rent control it and weather can strike it, everything you hate about it goes away. And instead, the building becomes invisible, indestructible, immortal, and teleportable. Everything that makes it better, you add in. Everything you don't like, it goes away. Bitcoin is the immortal asset. It's the asset that lasts 1,000 years. You want to keep your money 10 years? You want to keep your money 3 years? You buy a crappy currency. You want to keep it 10 years? Buy a strong currency. You want to keep it 50 years? Buy some kind of company or equity and worry about it for 50 years, or buy some property. What if you want to keep your money 500 years? How do you do that? You can't do it with any conventional asset. You can do it with Bitcoin. Bitcoin is the longest lived capital asset in the history of the world. How many people want to be rich forever? Right? I mean, why wouldn't you want to be rich forever? Bitcoin represents economic immortality. It represents the quest to make my company live not a decade. The average life expectancy of a company, by the way, is like 10 to 15 years. If your kids died at age 12, right, you don't think that's a health problem? So what if I told you the reason your kids die at age 12 is they drink dirty water? And I said the solution is drink clean water and they'll live to age 90. Would you change? Right? The money is the money is the fluid. It is, you're running on toxic capital and you want to live forever. You need clean money. So what do we see? We see an industry that's growing from 2 trillion to 200 trillion. When Bitcoin is a $200 trillion asset, what is it? Okay, well, it's still going to be smaller than equity and real estate and bonds. It's just going to be noticeable. It's the emerging global monetary asset. It is digital gold. It is 10 times better than gold, maybe 100 times better than gold. And it is the most powerful, secure computer network in the world. It's fitting in the 21st century. If you want to create a digital commodity, you put it on a computer network, you protect it with electricity, you protect it with computer power, and you spread it to everybody everywhere on Earth.
Michael Saylor is raising the alarm about legacy finance and firmly believing that Bitcoin will become the next major financial powerhouse. According to him, Bitcoin is more than just digital gold. It is a global monetary asset in the making, valued at about $2 trillion right now, but it is expected to grow into a financial powerhouse worth about $200 trillion. Although it would still be less than the total worth of stocks, bonds, and real estate even at that scale, its impact would be profound. Why? Because Bitcoin is a completely new financial layer that is faster, more secure, radically more efficient, and powered by the world's most resilient computer network. It is not just another asset. It operates around the clock, is protected by energy, is safe by indestructible maths, and is accessible to anybody with an internet connection. It doesn't need banks, brokers, or borders. Saylor warns that today's financial institutions might face the same fate in the face of digital capital, directly comparing it to Kodak, a giant that was unable to adjust to the rise of digital photography. The outdated system is brittle, slow, and analog. Bitcoin is nimble, decentralized, and designed for a world that is becoming more connected and online. Saylor claims that this is a comprehensive redesign of the global value transfer and storage system, not merely a financial upgrade. And it's already taking place. Capital flows will occur as institutions realize the benefits of Bitcoin, which include transparency, immutability, portability, and lack of trust. Watch the entire video to see Michael Saylor explain how Bitcoin is changing from a $2 trillion asset to the foundation of a new digital financial order. He also explains why those who don't adjust could be left behind in the economic equivalent of a Kodak moment.
I think digital is better. Digital pictures are better. Digital relationships, digital messages, digital documents, digital videos. Digital is always better, right? You don't believe me? Ask Kodak, right? It's like digital is better, right? Ask Polaroid. Microsoft, should be powered by digital capital. And Bitcoin is the highest performing uncorrelated asset. So you're going to hold something on your balance sheet that's not correlated to everything else. So let's look at the charts. Microsoft is up 18% a year for the past 5 years. Bitcoin is up 62%. What's the cost of capital? The cost of capital is the S&P 500. It's 14%. That's what you're judged against. How are bonds doing? They're down 5%. Now, what if I normalize this against the cost of capital? So what you can see is if S&P 500 is the baseline, Microsoft is outperforming the S&P by 4% a year. Bitcoin is outperforming by 48% a year. And bonds are underperforming by 19% a year. So Bitcoin is outperforming, Microsoft is going to do a buyback. Buying Bitcoin would be 10x better than buying your own stock. What happens? Well, in any event, if Microsoft buys bonds, you're destroying 99.7% of your capital over 10 years, right? That's the problem. Bonds are toxic, but buying your own stock destroys 97% of your capital. So you're going to destroy 97% of your capital buying the stock of MSFT versus buying the Bitcoin. And if you want to outperform, you want to reverse the transaction. You put Bitcoin on the balance sheet. What's the secondary impact of capitalizing on bonds? Because that's what Microsoft does. It decapitalizes, it gets rid of all of its cash flow, and it uses bonds for short-term as its primary treasury asset. So the result is you reduce your options open interest by 98%. Compare the open interest in MSTR, the interest in Microsoft, 98% less. You reduce the liquidity in your stock by 99%. What they're doing is they're denurturing the company, right? But you're not realizing it. Who's losing? The people holding the equity are losing because the equity becomes much weaker collateral. If it's not volatile, then it's not as valuable to hold. And if it's not liquid, then it's not as good collateral to hold. And Bitcoin, of course, emerged as the alternative to bonds in 2024. That was the point at which the SEC endorsed the Bitcoin ETFs. That's the point at which you could see FASB fair value accounting was coming. That was kind of year 0. We're now in year 1. There's three, if you define money as a liquid fungible asset, there's 3 monies that you can use to capitalize a company in this world today. There is treasury bills, sovereign debt that is, but generally short-dated treasury bills. There's gold, and there's Bitcoin. You've got 19th century money in gold. That was the best idea in the 19th century, gold. You've got 20th century money in treasuries and sovereign debt, and Bitcoin represents 21st century money, liquid fungible capital asset, alternative to bonds. And so you have a choice to make at Microsoft. You can cling to the past, which is conventional finance strategies. Use treasury bonds, do stock buybacks, dividend out your cash flow, or you can embrace the future. You can take innovative financial strategies based on Bitcoin as a digital capital asset. The first choice is a regression. You're divesting yourself of $100 billion a year. You're increasing investor risk and you're slowing your own growth rate. The second choice is a progression. You're investing $100 billion a year in your enterprise. You're decreasing the risk. You're accelerating the growth. If you look over the last 5 years, Microsoft surrendered $200 billion of capital. They literally won it. How many companies on earth ever generated $200 billion in after-tax cash flow? Right? It's got to be one of the 10 greatest achievements ever. They won and they snatched defeat from the jaws of victory. They took the money and what did they do with it? Give it away. What are we really doing? Well, we're dividending it out. That's one way to get away, and we'll buy our stock back. That's another way to give it away. What happens when you do that? You amplify the risk factors in your own prospectus for your own shareholders. You're now facing all these are actual risks that Microsoft publishes to the world. These are the risks that the world's greatest company takes. Every investor has to assume these risks if they want to use Microsoft stock as a long term store of value. What Microsoft did was they made sure they had $200 billion less capital to deal with the risks.
Michael Saylor issues a stark warning about where true wealth is growing, and it's not in tech behemoths like Microsoft. With its size and power, Microsoft rules the digital era, but its financial strategy is stuck in the past, investing billions in low-yield corporate debt and stock buybacks. In the meantime, Bitcoin is significantly outperforming it, outperforming traditional assets like bonds and producing yearly returns that are more than 3 times higher than Microsoft stock. Saylor contends that Bitcoin is subtly demonstrating itself to be the more intelligent, quicker, and more robust asset, while businesses cling to antiquated capital structures. It avoids the political risks that jeopardize fiat-based holdings, avoids inflation, and escapes the weight of regulatory pressure. Bitcoin is becoming more than just a speculative hedge. It is becoming a better basis for creating and maintaining wealth in a world where capital must move more quickly, store value safely, and withstand systemic decay. The message is becoming increasingly clear, and the numbers are unmistakable. If you're still parking value in conventional cars, you're probably missing the most significant financial shift of our time.